Hi everyone, this is Ali Hussein Kasim and this is AliTalksTech. This week in the Africa Tech News Roundup, we are following 4 interesting stories of note. The first one is Visa and MasterCard's land grab of mobile money and fintech players across Africa. The second one is a story that is not happening in Africa, but has some implications in terms of how policy and regulation is affecting fintechs. And that's one of my pet peeves around the fintech ecosystem. And this is a story of Revolut's struggles to get a banking license in the UK. Now, if you thought central bankers in Africa take too long to give licenses to fintechs, let me give you some interesting news. Revolut applied for a license back in 2021. The fintech regulator in the UK is yet to give them a license, and this is 2023. And we'll delve into the reasons why this is happening. The other story we are following is there seems to be a contagion going on in Africa when it comes to mobile money adoption. We saw a major curve going up for many years since the advent of mobile money in Africa, and that's back in 2007 when M-Pesa launched. In the recent past, however, we have seen an interesting plateauing and in some cases dropping off of users of mobile money. We will delve into the reasons why, and this focus this time is on Tanzania, but we seem to be getting this contagion in the major fintech or mobile money markets across Africa. The last story we're following is the Central Bank of Kenya's injection of 100 billion into banks in Kenya. So back to the first story, Visa and MasterCard. Seems like Visa and MasterCard wants a slice of Africa's mobile money. And this is not really news, but we are trying to now look at the activities of these big 2 payment players across the world. Visa and MasterCard over the last couple of years have invested in major fintech companies across Africa, InterSwitch being one major one. In the last couple of months, we have seen that Visa has played an interesting role looking at the different mobile money players and investing in them. And the same with MasterCard. Why is this happening now? Why does it seem like Visa and MasterCard are in the midst of almost a sort of war in terms of who will acquire more fintechs and mobile money players across Africa? This is a land grab, ladies and gentlemen. And here is one of the most interesting reasons why this is happening. According to McKinsey's report that they printed out last year, dubbed Fintech in Africa, the end of the beginning, 4 key interesting statistics or reasons or scenarios that we are seeing in Africa that is making these big players focus a lot more on the mobile money / fintech ecosystem in Africa. Number 1, 10% of transactions in Africa are digital. Now, let's step back 1 minute and appreciate that number. About 10% of transactions in Africa are digital. So there remains 90% of transactions that are not digital. Your guess is as good as mine where this 90% is at and who is going to grab that 90%. And more importantly, what will it take to grab that 90%? The other interesting one is $4 to $6 billion of fintech revenues in 2020, and there's only 3 to 5% fintech penetration across Africa, and this is in line with global standards, global leaders. C, the third one, fintech solutions are up to 80% cheaper, and savings using fintech products are 3 times higher. Last but not least, fintech revenues could grow 8 times to reach $30 billion by 2025. This is just Africa. So your guess is as good as mine why the big players are starting to really focus on Africa, spending billions of dollars in acquisitions and other activities. Visa recently announced a $1 billion fund to invest in fintechs, to enable them further in terms of training and in terms of getting them ready for policy and regulatory platforms. MasterCard is doing the same. They have a solid team across Africa, just like Visa. So we shall keep this here. We shall try and see where this is going to lead. The second story is Revolut's struggles to getting a banking license in the UK. I think this is a clear case study that as you grow as a startup, you have to go start wearing your grown-up trousers, because you can't continue to think you're a startup and think that regulation will not touch you. That is not going to happen. The regulators in the UK have raised a couple of issues, and there is a Financial Times report I want to read 4 of these key issues. For me, I wonder why an organization of Revolut's size and of its stature will struggle with such issues. The first one, obviously, Revolut has grown tremendously over the last couple of years. With 8 million customers, they are among the top banks in Africa, in the UK, in terms of the number of users of their platform. So obviously, regulators seek to ensure that their platforms and their systems have the robustness and they comply with the operations and the vastness of the operations that Revolut is engaged in. And that, ladies and gentlemen, is a very valid point for the regulator to worry about. Number 2, financial reporting has also come under scrutiny for Revolut. The company has experienced delays in finalizing its accounts for both 2021 and 2022. I mean, come on, guys. We're in 2023. You have not reported your financial reports to date? I mean, that is a rookie mistake. That's a one-on-one issue any company should not be having. You should not be having these problems. This has raised concerns among the regulators. And by the way, here's the interesting bit. What is the reason behind this? Revolut's decision to develop its own accountancy software package instead of using an off-the-shelf solution has contributed to these challenges. Regulators have expressed worries about the company downplaying the issues surrounding its financial reporting. So this is, guys, I'm not sure why we're even discussing this. Fact, even if you want to develop your own financial reporting software, you can stagger it. Use it off the shelf, considering the fact that you have to adhere to lay down procedures of financial reporting. And the fact that you've applied for a license, while at the same time saying you are delaying your reporting because you are developing your own financial package. I'm sorry, guys. Someone at the C-level needs to be fired on this one. I'm not mincing my words on that one. Number 3, the departure of several senior executives has further impacted Revolut's regulatory journey, as regulators prefer stable management teams, obvious. To address these concerns, the UK's Prudential Regulatory Authority has requested that Revolut expand its board to include directors with more tech and banking expertise. Shouldn't this be obvious? Consequently, the company is in the process of adding 2 non-executive directors to meet this concern. Well, you know what, guys? I put up my hand. Revolut can hire me as a non-executive director, because I say this in jest. Number 4, external factors are also at play. Banking turmoil, including the collapse of several banks in March, has made regulators more cautious, while the current economic climate raises concerns about fintech companies' ability to raise capital if needed. That has been a problem in the last couple of months. There has been a major downturn in basically startups raising funding, irrespective of your stature in the market. So bottom line, Tech companies must appreciate a couple of things. Number one, that they are not exempt from regulatory oversight. Number two, that what affects the market and established players will invariably affect them. Question, time to wear your grown-up pants, guys. We now go to the story in Tanzania where mobile money usage is dropping. By the way, this is not just a Tanzania phenomenon. The phenomena is spreading across Africa, from Nigeria to Kenya to now Tanzania. If you follow me, if you've heard me talk, I've said this many times before, till I'm blue in the face. Paying for payments is a race to zero. Let me repeat this. Paying for payments is a race to zero. Players must start seriously thinking about layering services around payments because people are starting to wonder really, really loudly, why are we paying for payments? And guess what? They're also voting with their wallets. Guys are starting to say, you know what? Maybe this wallet of mine needs to go back to physical wallet. Something to watch, something to consider, something for policymakers to think through. I know some guys in Kenya are starting to ask or say the other reason is because the Kenya Revenue Authority is starting to zero in on payment service providers, to zero in on merchants who are accepting payments via digital channels. Look, guys, fact of the matter is any revenue collector in the world today is seeking to expand its tax base. The people who pay taxes in this country are much less than the people who do not pay taxes. So we need to expand that tax bracket so that we can eventually start paying less taxes. I know this may not be a very popular thing for me to say now, but guys, we all need to pay our taxes. Last but not least, the story we're following is CBK's injection of 100 billion shillings into banks in Kenya. This has been necessitated by the bonus payments to tea farmers in Kenya. Tea farmers in Kenya get bonus payments once or a couple of times during the year. And during these bonus payments, banks require humongous amounts of money that they don't keep in cash, in liquidity form. This usually is where the Central Bank of Kenya comes in as the borrower of last resort. That's 101 economics. So I would not be reading too much into that. Ladies and gentlemen, this is what we've been following up today. Until next week, I look forward to engaging with you guys in our different social media platforms, from LinkedIn to YouTube to Spotify. And now we have a TikTok channel, which is growing phenomenally, which for me actually has come as a surprise. But thanks to my team who have really been pushing me towards expanding our sphere, our readership, our listenership, our viewership. Asanteni sana.